Hello, everyone, and welcome to Impact, the California MBA podcast, where we break down the legislative and regulatory issues shaping the mortgage lending industry and what that means for your business. My name is Paul Gigliotti, CEO of the California MBA, and today we're talking about, that's right, AI, artificial intelligence, along with automated decision making and how policymakers can protect consumers without unintentionally limiting the innovation that help many of those same customers make better financial decisions and have a greater array of opportunity for home financing. Here in California, AB 1018 remains an important bill for us to watch, and we're doing that very carefully with California MBA. The bill does not advance early this year, but there is still possibility that it could come back again in August, towards the end of August. Potentially with amendments, which is what we're expecting. That's influenced by Colorado's AI law, which just went into effect. So the California MBA has opposed the bill unless amended. So as it stands right now, it's opposed from the California MBA. The concern is not whether AI should be used responsibly. It absolutely should. The concern is whether broad new requirements could duplicate law and regulation that already govern mortgage lending, expose sensitive fraud prevention systems, increase costs, or make it harder for lenders to use technology that improves accuracy, efficiency, the borrower experience, and brings loans to the table that the borrower might not know about. The larger policy question is this: how do we regulate AI in a way that protects consumers while still allowing responsible innovation to create better outcomes? Joining me today is a good friend of mine, someone everybody in the industry knows. This individual spent decades helping the mortgage industry think differently about technology, financial education, and the consumer experience. I'm thrilled to have Dave Savage, founder of Mortgage Coach and co-founder of First Home IQ. Dave, thanks so much for being here with California MBA and Impact.
Yeah, no, it's an honor to be here. Really appreciate all the work that you do, Paul. You've done an incredible job of organizing and creating impact with in California. So it's pretty amazing how much momentum you have, and I'm fired up.
I appreciate it. I love the double pun. I got that. You created impact.
I did. Well, I use that word a lot. I mean,
Yeah.
it is the key to success in the industry.
It is, absolutely. So let's dive in because we have a lot of nooks and crannies to explore in this conversation. First, let's talk about, so if we are with a policymaker, let's talk about what they need to understand about AI and homeownership. When policymakers hear the words artificial intelligence or automated decision making, the conversation can quickly focus on risk. And most importantly, from my perspective, what I've heard is bias in systems making decisions without meaningful human involvement. And those are legitimate concerns, but AI is also being used to help mortgage professionals better understand a consumer's financial picture. And what's crazy is we've been using automated decisioning since like 1998, right? DULP first popped on. So Dave, from where you sit, what do policymakers need to understand about how AI is actually being used in mortgage lending today? Lay it on us.
Well, first of all, I think it's an incredible opportunity for homeownership in America with the data that we have on consumers, using AI as a recommendation engine, using AI to look at someone's equity, to look at all the information and come up with recommendations on what you qualify for. Some of the issues with AI is making sure that we're not using it to discriminate. Those things could all be trained into AI so that it's looking at the data in the most objective way possible. We could be identifying people that qualify for homeownership, but might be sitting on the fence or may not realize that they qualify. And we can come in and say, hey, here are the programs that you qualify for. Also, not only can we make loan officers better, we can make the advice that loan officers give to consumers better, leveraging AI. And by the way, this is happening right now. Like at Mortgage Coach, we have infused AI into the borrower experience so that customer can ask questions like, "Hey, if I'm going to live in the home for 3 years, which option would be best for me and why?" Like
Yeah.
they couldn't do that beforehand. They had to rely on the conversation between a loan officer and the consumer. And not only was it not always accurate or always right, it wasn't always auditable and able to see what was said. So at least now we live in a day where that consumer can ask questions, they can get better answers more compliantly, more consistently, and it can be audited to see exactly what question the consumer asked and what was answered by the AI. So, I mean, that's just one of many use cases where the consumer's winning, the loan officer or the mortgage company that's delivering this AI enabled pre approval or AI enabled refi proposal, they're winning, everybody's winning, and it's improving compliance.
It's really interesting that you bring that up, Dave, because we talk about like a top of funnel experience being a little bit more automated. And I think what's compelling about your example is when we're trying to, as an industry, bring in maybe first time home buyers or maybe home buyers that aren't as educated in the home buying process, what they can afford and can't afford into, the industry or into the fold of being a homeowner. It's important, I think, as an industry to provide them the experience that they're used to. And so if you look at the world today, our consumer is used to um, being, being self-served, having a self-service solution, but then having someone there when they need it. So as you're talking about, what happens with Mortgage Coach, and we'll get into First Home IQ as well, but the AI solutions, the AI engines, the LLM technology, it seems to be, as you were talking through the experience with Mortgage Coach, it seems to be providing the consumer with a buying experience they're used to, which I think is part of, is really important for adoption and stickiness. Does that make sense?
Yeah, no, it definitely makes sense. And, while we're talking about first time home buyers, there are millions of mortgage ready first time home buyers that are not aggressively pursuing getting into escrow and buying a home because they have misconceptions around down payment. They
Right.
have misconceptions around credit. They're confused, and AI can unlock this for them. And I think it's also important that as a mortgage industry, if the consumer just engages in their own AI that isn't qualifying them, doesn't understand exactly what they qualify for, and what down payment they have, and what their income and how the income will be looked at the lender, they can get misinformation. So it's super important that we as an industry have enterprise level AI that understands their credit, understands their income, understands the guidelines, understands the pricing as of this day. And now we can unlock homeownership. We can help tell them a story, give them a digital experience that shows them, hey, this is what your monthly payment is, but look, you have tax benefits. So here's what your really effective payment is. Um,
Right.
if you believe that homes are going to appreciate and you believe that your money invested is going to earn, we can model that out, and AI makes it easy to do this at scale. So we can deliver really individualized advice at scale, and that was impossible to do without AI. Because
Yeah.
there's a lot of smart loan officers that know how to do this. There's a learning curve to be one of those smart loan officers, and now we can scale advice with price in a way that really helps people.
Yeah, I think that's brilliant. And what I love about your statement that we're going through right now really brings us to what I want to talk about next with you. So we're talking about first time home buyers, right? And the lack of fully understanding the home buying process and what it means, and how it creates financial stability and financial wealth for you and your family, whatever that family unit looks like. Let's talk a little bit about first home IQ. as that's focused on financial literacy and homeownership education and helping the next generation become more prepared and confident about home buying. Can you walk us through how First Home IQ utilizes AI in educating uh, the prospect or first potential first time home buyer?
Yeah, so there's a couple different things. So first, before I kind of call it the AI part of First Home IQ, I know that like this is my 40th year in mortgage. I turned 62 this year. And I have been very critical for years about how schools don't teach home ownership. They might teach some really basic financial literacy skills, but they really don't teach that. Like home ownership is the difference in it's the wealth gap. It's the front line to the wealth gap in America. People who own versus people who rent. And everybody should have a plan. Not everybody should be buying right now, even if they're mortgage ready and they can qualify. That might not be their plan. But we're using AI in a number of ways. One, we're using it to build great educational content faster and better than we've ever been able to do that before. And then, we're embedding AI in some of the experiences that we create. um, we're giving and teaching both loan officers and consumers, hey, how to use AI to be financially literate. Uh, so I mean, I think we're at a time where we can really grow the pie. Like when you look at the 40 years I've been in this business, the market share and the number of loans, the number one engine is interest rates. When rates come down, the market and the pie gets bigger. When rates go up, the pie shrinks. And that's still going to be a driver. So I'm not saying like that's not relevant. It's still very relevant. But but education and enlightening people to make an individualized decision based off my income, based off of my goals, based off of my personal assumptions, are rates going to go up? Are rates going to go down? Uh, Give me the big picture. And so First Home IQ has built some big picture calculators for Gen Z and people that are, should I buy now? Should I wait? And then of course it's an entire educational platform to take a consumer from I'm confused, I'm overwhelmed, should I buy? Can I ever buy? To, oh, I'm clear, I'm confident, and I'm either ready to go now or I've got a 2 to 3 year plan.
And what that 2 to 3 year plan is, right? Like you have the ability to break that
Yeah,
down,
we're letting
utilizing.
them pick their adventure.
Yeah.
We've even created some games, which by the way, those games were created with AI. Like when you look at what Kristen Messerly has done, uh, like we would have needed a much bigger organization and team to go from, oh, we've got a loan officer that's going into a college and has this idea of a Jeopardy game around financial literacy and mortgage. Well, thank you, Claude Code. Kristen was able to, one person was able to create that experience. And now, hundreds of loan officers and thousands of consumers are getting educated with an AI created Jeopardy game.
Yeah, that's pretty awesome. I can't wait to see that game. I'm a
Yeah.
little afraid of what it would say about my goals, but I can't wait to see it. Um, let's move into a little bit around governance and regulation, because you have been in the industry for a long time. You've seen a lot of different waves. You've seen a lot of different eras in the industry, and we're in a really interesting one right now where we're seeing states take on more and more responsibility of regulation and law, and federal having that same stance. So there's a lot of lap over. I think everyone agrees that AI needs to be appropriately watched over, appropriate governance, accountability, and consumer protections. But the challenge is creating those protections without that duplicate layer that I was talking about, federal and state, that gets really sticky. And the industry is already governed by, fair lending laws, adverse action requirements, privacy rules, investor guides, licensing standards, and we don't even need to get in like examination audits and vendor oversight. AB 1008, that particular bill, raises a particular concern around disclosure requirements. The Financial Services Coalition argued that requiring institutions to publicly identify certain automation systems, developers, versions, and outputs could expose fraud prevention tools and make it easier for bad actors to invade them. From your experience, um, what does, from that perspective, where does the innovation perspective begin and what does smart AI policy look like? Like, from your perspective, where does it stop? Right? Like, if you were to have a conversation with a lawmaker, what would you bring to the table in that conversation regarding
Well,
the
well,
duplication of
well,
regulation?
first of all, Mitch Kiter is my go-to guy, and I've interviewed Mitch a number of times, so I would love to hear his answer to this. I think he could be more specific and comprehensive than I can. But here's what I do know, and this is what I do believe. For the most part, being a compliant company, being a compliant loan officer is actually a sales competitive advantage. A lot of what compliance has to do with is being consistent. I've interviewed thousands of loan officers, and the difference in the most successful and the average and the struggling is the lack of consistency. A great compliant pre-approval experience is also going to have a higher conversion rate. So I personally see a real correlation between doing it right, being compliant, and being highly profitable and successful is like they partner. Now, with that said, there's no doubt there's a real challenge and a cost between what national requirements are and then managing all these different states. Now, personally, it's like control the controllables. Like, hey, we live in America. States are going to have different positions, and that's the way we do it in America. And it's a beautiful thing. It's what makes America great. So I do think embracing different state regulations is just one. It's not something we have control over. So even if I had a magic wand, I don't have a magic wand, and we can't change it. In
Yeah.
terms of AI specifically, and what are the tactical issues, like that's just not my pay grade. I need to pull in my chief compliance officer or Mitch Kiter to really nail that for everyone.
Well, I think your perspective provides like an overall arching, support to one. Obviously, governance and regulation is important in AI, in any technology, right? We've been in the
Well, it's
industry long
especially
enough.
important with AI because it's moving so quickly and it's so
It is.
transformational.
Yeah, it is important with AI. But I think that there's a point where, we understand that poorly designed AI policy would not only limit operational efficiency, but also the industry's ability to educate consumers with, solutions like First Home IQ, expand home ownership, and provide that more personalized financial guidance that you were talking about, with Mortgage Coach or First Home IQ as well. But I think what's important to realize is, again, we go back to the cornerstone of the California MBA, and that's to educate lawmakers on how those proposed bills really affect the industry and ultimately the consumer. There's a lot of language in those bills in this AB 1018 that needs to be looked at and recrafted so that it's utilized for its sole intensive purpose. And that's to ensure that, yeah, there's no, that, AI systems aren't hallucinating and there's not bias, but they're being utilized properly, the right way, to support the consumer understanding the process or the programs, and to allow for expanded credit boxes to be showcased to the consumer. I think that's where the beauty of AI, when you talk about a top of funnel experience, kind of comes into play.
Yeah. And one thought came to mind, that I just think holistically it's something I'm very passionate about and it's lacking from the industry currently is while we have advocacy and we do advocacy, and I do think it's super important now more than ever that our industry is digging in. We should have more people educating politicians, because they do listen. I've been a lobbyist on the Hill multiple times, and they're taking notes. While I have gone into meetings where they were unprepared and I felt like I was wasting my time, I've been into a lot more meetings where I felt they were very well prepared and they were really listening. And so I think one of the biggest things we could do is have more loan officers involved in advocacy and
Yeah.
more loan officers paying attention to this. Because remember, all you loan officers listening or managers who have loan officers, compliance, first of all, we need to be compliant. It's the lifeblood of our business. And in most cases, we can deliver a better experience and it can be a sales and marketing advantage. Um, and so it's advocacy and being involved in the process, I think, is the way we get there, is just more loan officers, more people being advocates, which is something that First Home IQ is leaning into. We brought over
Yeah.
50 loan officers to Washington, D.C. this year for Advocacy Day. And Paul, as you know, you've met with Kristen. We want to make sure that we bring more loan officers for California's Advocacy Day than you've ever had. That's a big goal.
Yeah. Well, and that was going to be that was just about to come out of my mouth. We're so thrilled to be able to collaborate. It brings me great joy to have First Home IQ as a member of the California MBA so we can support each other in that initiative. So thank you to Kristen and you, Dave, for coming aboard. We really appreciate that. This has been a fantastic conversation. I knew it would be. As always, I appreciate your perspective, your guidance, your intel around technology, consumer experience, and financial education in advocacy. For me, the takeaway is not that AI should operate without rules or accountability. It has to have those functionalities, but the takeaway is effective policy must distinguish between the different uses of technology and how it's being used and why. Um, as always at the California NBA, we support responsible innovation and strong consumer protection. But we also believe regulation should be informed by the real world experiences of lenders and professionals like yourself, Dave, technology providers, and whatnot on how policies are intended to protect the consumer and how they go about doing that. So, Dave, thank you again for everything you've given to the industry. Welcome to our community and thank you for your time on Impact. It's been great to have you here.
Well, it is an honor. And again, thank you for how hard you work for our industry and for our state of California. And look forward to doing more together, more impact together.
More impact together. I love the puns. Thank you, my friend. We'll chat soon.
Take care, everybody.